London Property, home of Super Prime, where you can find informative, educational and entertaining content covering all aspects of property.
Hello and welcome to London Property, the home of Super Prime. I'm your host Farnaz Fazaipour, and today we're in conversation with Matt Smith, who is an authority on properties along the river, amongst other things at the top end of the market. So welcome back to our show.
Thank you, Farnaz.
So let's start by you telling us what's going on in the market at the moment.
Well, I mean, we're in a particularly strange market at the moment, what with interest rates being on the rise, and there being quite a lot of instability in the market. So we're dealing with challenging times, probably the most challenging, I think, since 2008 credit crunch crash. There's a lot of caution in the market. The pound being what it is, having fallen quite a bit against the dollar, has meant that there are buyers from overseas or dollar-based buyers looking to pick up what is relatively a bargain for them now in London. But there is still a lot of expectation of potential falling prices over the next couple of years, especially. So we're seeing bargain hunters back in. And I think what we'll see from the market for the next foreseeable future, I think. It's too early to say how long this might continue, but I think what we'll see is a market that's based on cash buyers looking for very good deals.
Which takes out the element of interest rate risk, I guess, yeah.
Yeah, exactly. So, I mean, there's very likely to be a correction, I think, in prices for people who have to have a mortgage if they want to buy, because affordability is so much higher than the last time interest rates were, you know, let's say 3, 4, even 5%, which is actually not such a high rate historically, but the affordability factor has changed so much because property prices have increased so much. So when the last time people were borrowing 4 or 5%, prices were, you know, almost half what they are now.
Yeah. And so you have a focus on the river. So you have a lot of knowledge about how the market is responding to all these new developments. It feels to me like in the past 10 years, actually, the river has really taken a life of its own. You know, now it's so much more accessible. You've got the Uber bus, river bus or whatever going on. So what kind of interest are you seeing in these developments and who are they coming from? What's
interesting is the river has, as you say, has changed completely over the last 10, 15 years. Each building offers, or each development offers something very different to the one that's right next door and can be completely different in price from the one right next door. Battersea Power Station is about to open its doors properly this weekend, I think, is a phenomenal development. I mean, that's something that's really iconic on the river that was sat derelict for so long. Property within places like that to buy is very plentiful. There's a lot of flats, you've certainly got no shortage of stock if you want to buy them. Lettings, on the other hand, you can't get enough of them. So where we're doing a lot of business on the river, and you're right, we do focus, a lot of our knowledge has been focused on the river, although that's certainly not the only part of London that we deal with, but we are well known for the river, and we can't get enough stock on for lettings at the moment on the river. They just go under offer almost immediately.
And what do you think is causing this manic rush to rentals and these increases in prices?
Yeah, I mean, prices have increased so much. Well, obviously we had the pandemic, and everyone disappeared back to their various family homes or countries or wherever it was that they were from, and didn't stay in London, and the bottom fell out of the market, and where people were renting their flats out were historically very low. So now that people have rushed back into London, especially international students, people like that, people who perhaps moved out of London during the pandemic to a bigger country style house, have realised that they need a bolt hole in London actually. And in a market where stamp duty is so expensive and property prices aren't rising, then why not rent? Because you can rent something for 3 or 4 years just of what it will cost you in stamp duty to buy something. So if you're not going to have a capital gain, you might as well rent. And I think if we look at property rental prices rising, they have risen 30% over the last few years, but we have to take into account that they were very low during the pandemic. So in reality, from the previous peak, they're probably only about 10-15% higher than they were, but there's just no stock. And that is what's causing a bun fight over every.
And do you think that do you think there's no stock because the individuals are being taxed out of the market, or what do you think is causing the lack of stock?
I think there's a number of reasons. People aren't moving, the cost of living crisis, and people who've perhaps got rental agreements where they're paying a certain amount. If they move, they'll have to pay a lot more, where their current landlord is probably, maybe not putting up the rent as quickly as they could if they arranged a new tenancy. I certainly think that there are a lot less private landlords in the market than there have been for years, because it's just not advantageous anymore to be a private landlord. Historically, you'd probably want to buy rental investments one or every couple of years if you had the means to do so, because you could offset mortgage interest rates and your wear and tear and various other benefits for tax reasons. It was a very good investment, and of course, the capital gain that you would get from the property prices rising. But all of those factors have meant that it's really not the best place to keep your money necessarily, and you, as a consequence, have less private landlords and less stock.
And talking about private landlords, we've always had kind of mom and pop landlords and less institutional in comparison to mainland Europe. Are you seeing a shift into institutional investors, and where's that shift coming from?
I think we are. I'm probably not the best person to ask about that, but we've certainly seen the private rental sector massively increase over the years, over the last few years. I know that. Previously when I was at Knight Frank, there was a whole department that was dealing with the private rented sector, and that collections of people were getting together to build, essentially to rent out, to build buildings with flats in only to be rented out.
What advice do you have to our listeners, both sellers and buyers at the moment?
Well, I think it's actually it's a good time to buy if you don't need a mortgage. It's certainly a good time to get a deal. In terms of sellers, I think you need to be very realistic, and you need to be patient, because even as short as a month ago or 6 weeks ago, you would have had a very different market in which to sell a property than we're in now. And there is a lot of changes going on with affordability, with who can afford to buy a house when they were borrowing at 2.5%, 3%, and they're now borrowing at 5.5%, 6%. It really does make a big difference. So the market is going to move more slowly and more cautiously, and I think in all likelihood we're going to see, sadly for sellers, prices are going to come down over the next couple of years. Come down? Mm-hmm. From being pretty flat? Well, from being flat, and frankly, not that flat. The prices actually, bizarrely, during the pandemic went up quite a lot. So, I think we'll almost certainly come down to pre-pandemic levels. And depending on how the next month goes, and Kwasi Kwarteng's announcement of balancing the books at the end of the month, which fortunately has been brought forward by a month, we'll have to see what happens and what kind of stability we can get into calming the markets. Because I think lenders just want to know where they're going to be able to set their rates, and at the moment I don't think they do. So it's a bit of a panic stations period that we're in right now. It's funny, it's always very difficult to predict, and when you look back on the big firms that have all their stats coming out, and I remember, the prediction was that we were going to be in a steady increase for 5 years. Yeah. And then suddenly it's like, whoops, surprise. Yeah, that's right. Actually, forget that. Something else is going to happen now. Yeah, so, exactly. Everyone's revised their forecasts. Yeah. They have to. You've got to be right on the money when you're predicting these sorts of things. And that's what they do. I think for buyers and sellers, the thing to do is
just make a decision on what you think is going to happen in the next 4 months.
Yeah.
And then don't try and predict beyond that. And we'll come back to you.
And even that might be hard.
Yeah, and then we'll come back to you with more news. Well, thank you very much for talking to us, and
Pleasure.
we look forward to welcoming you back for our next market update.
Thank you, Farnaz. That's been great.
We hope you enjoyed that market update. We speak to experts who are at the forefront of the top end of the property market on a regular basis, so stay tuned and make sure you follow our podcast channels through the normal platforms.
Thanks for listening to the London Property Podcast. Head over to londonproperty.co.uk and subscribe to our newsletter to receive latest updates.